In a move that has shaken the global economy to its core, President Trump's sweeping trade tariffs have officially gone into effect, igniting a fierce international backlash. This is In the Know News, your destination for deeply researched, fact based reporting on the world's most pressing developments. Today, we're covering a pivotal turn in the escalating global trade war, China's dramatic response to President Trump's tariff onslaught, and what it means for markets, economies, and the future of international trade. As of Thursday, China will impose a staggering 84% tariff on U.S. goods, up from the 34% previously announced. This sudden and severe increase, confirmed by China's Ministry of Finance, marks Beijing's most aggressive counterpunch to date. The escalation comes directly in response to Trump's new tariffs, which took effect earlier on Wednesday and include eye-watering 104% duties on Chinese imports. The global trading landscape, which for decades operated on carefully negotiated norms, is being redrawn overnight. These reciprocal tariffs, as Trump calls them, are aimed at correcting what he labels unfair trade imbalances, particularly America's chronic trade deficits with partners like China. But the consequences have proven explosive. Markets across the globe have been rocked. Wall Street, reeling from tariff-fueled uncertainty, saw the S&P 500 tumble toward bear market territory, marking its steepest drop since the index's inception in the 1950s. U.S. Treasuries, usually a safe haven in times of turmoil, were not spared. Investors dumped them at historic rates. Even the U.S. dollar, typically a stalwart during crises, weakened against a basket of other major currencies. A brutal sell-off in U.S. bonds has sparked fears that foreign capital is fleeing American financial assets en masse. Shares of major U.S. banks continued their free fall in pre-market trading, while oil prices plunged to four-year lows, showing how deeply the tariff shock is rippling through asset classes. Scott Bessent, U.S. Treasury Secretary, called China's retaliatory tariffs unfortunate during an interview with Fox Business Network, criticizing the structure of the Chinese economy and predicting Beijing would ultimately lose this fight. Yet, experts caution that the outcome is far from certain. Ting Lu, chief China economist at Nomura, said, "The U.S. and China are stuck in an unprecedented and expensive game of chicken, and it seems that both sides are unwilling to back down." Trump had nearly doubled the tariffs on Chinese imports just days earlier, jumping from 54% to 104%, in a calculated escalation after Beijing's last round of countermeasures. China, meanwhile, has signaled that it is digging in. It labeled its trade surplus with the United States an inevitability and declared through official channels that it possesses the determination and means to sustain the battle. The country's offshore yuan hit record lows amid the financial upheaval, though Reuters sources confirmed that China's central bank had intervened quietly, instructing state-owned banks to limit dollar purchases to avoid a steep currency crash. Still, market nerves remain frayed. On the international front, China delivered a sharp rebuke to the U.S. at the World Trade Organization, stating in a formal declaration, "The situation has dangerously escalated. China expresses grave concern and firm opposition to this reckless move." The statement, submitted to the WTO's Geneva headquarters, underscores the geopolitical gravity of the moment. China accuses the United States of undermining the very foundations of the global trading system, potentially destabilizing markets far beyond the two nations directly involved. The European Union is not standing idle. EU member states are moving swiftly to implement their own retaliatory measures, expected to mirror China's aggressive stance. A draft seen by Reuters reveals planned duties of up to 25% on a broad array of U.S. imports, including motorcycles, poultry, clothing, fruit, wood, and even dental floss. The European Commission, which manages trade policy for the bloc, has positioned this as a necessary countermeasure to protect European industries from the shockwaves of Trump's tariffs. Amidst the financial carnage, President Trump appears unmoved. He's issued mixed messages, declaring the tariffs permanent, while also suggesting they are our leverage to force renegotiations with trade partners. This ambiguity has left investors jittery, unsure whether to brace for further escalation or hope for a negotiated settlement. With Canada and the European Union joining China in resistance and major corporations seeing their valuations slashed, the cost of this economic showdown is mounting rapidly. What began as a campaign promise to rebalance trade has spiraled into a full blown international crisis, threatening to unwind decades of economic integration. The stakes are enormous, not just for the US and China, but for a global economy already struggling with inflation, tightening monetary policies, and fragile supply chains. As this dramatic trade war unfolds, In the Know News will continue bringing you clear eyed analysis and factual reporting on every development. The world is watching, the markets are trembling, and the rules of global commerce are being rewritten in real time. Stay informed, stay ahead.